Good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. This is the show where we put you in front of where the action is in the markets. Let's go ahead and get started, review what we're going to be covering today. We are going to start by taking a look at the current markets. Where are we standing? Are we still in a confirmed uptrend? And then drill down into the individual underlying sectors within those markets. From there, we're going to take a look, just a few of the names that are going to be reporting their earnings this week. These are stocks that are noteworthy. You need to be aware of them. Also, a couple of them are kind of interesting looking, so we're going to review a couple of stocks there. Also, we're going to look at some of these preset screens or scans that are on StockCharts.com, and one that I've saved from last Friday, gaps up. We're going to review why that particular screen is very interesting, certainly at this juncture in the markets, and how you can use this screen going forward. Also, planning your exit strategy. Too often, everyone's telling you stocks that look interesting, where to get in. I argue it is even more important to know when it's time to exit, when that uptrend is over. We're going to review a couple of examples there so you can formulate a strategy. And then you asked, these are questions that have been emailed to me over the time, and I urge you, if you have any, by all means, go to meminvestmentresearch.com and reach out there. I enjoy hearing from you, and hopefully we'll get to some of these questions. So let's go ahead and get started. I talked about taking a look at the broader markets, and here's the S&P 500. We're looking at a daily price chart. Each bar here is 1 day of activity, and we do see that the broader markets are in fact continuing in a nice healthy uptrend. We of course hit another new high last week. We're a little bit wobbly today, if you will. The markets are getting hit a bit, but certainly overall, we can see this RSI up here is above 50, trending upward. And then your stochastics, this is another momentum indicator. You want to pay attention to the position. Is it above that 50? And then also the slope. And we are trending upward above that 50. So we are generally in very good standing as it relates to the broader markets. Now let's go ahead and drill down just a little bit further from here, because of course knowing that the markets are doing well is one thing. How about we take a look at where within these markets, what areas are exhibiting more strength? So the best way that we can do that is to go ahead over to this candle glance. This is something that you can get from the initial interface page on StockCharts.com, and take a look, because I've been using Candle Glance for some time now, and they have updated Candle Glance. So a lot of the work that I was doing, you can access it automatically, these predefined groups. It's super wonderful. So what I've done is taken these sector ETFs, go ahead and just access that. It will pull them up. And then from there, I like to put an RSI indicator that I overlay, and then go ahead and sort by descending. And so then we will get an immediate glance and view of where the strength is in the markets. This is a 2-month view snapshot here, and we can see your clear-cut winner is technology. This is where the strength is. This index continues to hit a new high. But take a look here, consumer staples. Now, normally, consumer staples are viewed as defensive simply because the underlying companies in there provide products that are needed regardless of the economy, and these stocks also offer a higher yield. There is a whole dynamic going on among these staples stocks as they shift out of consumer products that were lagging, and they are getting into these newer consumer staple products. Prime example, Beyond Meat, protein-based products. There are a number of companies that are getting into to that space, as well as other dynamics that are taking place. Again, these staples, these old staple stocks are shifting. So I would urge you, if we have time, we can take a look at some of the better names among them. And then financials, they were up well over 3% last week. Big performer as they're starting to report their earnings. Financial stocks, particularly banks, are really picking up. And then communication services. This is all about last week. We had Google was a big performer there, Twitter, a number of other internet related stocks that are really picking up. Again, that's earnings related. So then as we drill down, we can see energy continuing to suffer. This group has really not been doing well, certainly in the recent past. And then healthcare is another area that has been languishing. But for those of you that subscribe to the MEM Edge report, my biweekly report, you'll know that even though healthcare as an overall sector is lagging, there is a very superior uh, sub-industry group in here that is exhibiting strength. There are a couple of suggested holdings stocks that are on that MEM Edge biweekly report that have really been outperforming. So that is a view of the individual sectors among the broader markets. And I would urge you at your timing, you can go ahead back in here and take a look at any number of these other various ways that you can take a look at these predefined groups on this candle glance view. But for now, we have a lot to get to. I mentioned to you that there are a number of stocks that are reporting this week. And of course, first and foremost, let's take a look at Apple. This stock is due to report their earnings tomorrow after the close. Let's take a look. The stock is in a very confirmed uptrend. So by all standings, it certainly looks fine, but that is not going to be any indication as to whether the stock will in fact report above or below estimates or how they'll respond. A lot of times it can be helpful. Let's take a look historically. The company reported earnings back here, gapped up. It was a wonderful report. But of course, then we fell into that May malaise, a very big pullback. But we can see just by looking again at history, taking a look at the end of January, this was another prior report, gapped up, strong report. So we can see this company has a history of gapping up after reporting solid results. So we will be on the prowl for that. Oftentimes the movement in Apple will impact other stocks simply because it is such a big component of the market and there are a lot of companies that supply to them. Let's take a look at a couple of other names that are reporting this week. WCG, this is a big WellCare Health Plans. And I'm pointing this out because we can take a look last week. One of the other stocks in this sub-industry grouping reported their earnings. And in fact, that is not the stock that I was looking for, but Humana is another one that's in that healthcare space. They are also due to report their earnings. And both of these are due to report tomorrow. So we'll be keeping an eye out on these to see how they come in again with their numbers, how the earnings respond. Let's take a look at a stock that I thought was interesting in the sense that it could be potentially reversing its downtrend, and it is due to report on Thursday. This is a Biomed, ABMD. The stock has really been struggling, never really rebounded from last year's decline in the broader markets. So we can see it's just been sitting down here since May in this very tight trading range. Last week, we did see a bit of a pickup. However, it was not sustained. So this particular company has really a very strong growth profile. They're on track to earn 26% in earnings this year, 29% next year. So I would say keep this one on your radar, because if they do come in with any kind of report that is at all positive, given the dynamics as far as the stock just being down here, not really performing or doing much, we could see a bit of a tick up. However, I would look for resistance at this 306 level, which is is this down trending 200-day simple moving average that prior rally attempts were met with resistance at that level. One last name, of course, we have over 700 stocks that are going to be reporting this week. I'm just highlighting names that look just a bit interesting. This is TYL, Tyler Technologies. They are a software stock. And we can see that, in fact, this stock is due to report on Wednesday. Analysts are revising estimates up going into earnings, and that can be a bullish sign. We saw a nice uptick here on volume last week, indicating potential analysts may have some insights that we're not aware of. The stock is poised to break out of this 3-month base, which makes it equally compelling. So we'll keep an eye out on that stock. So those are names that are due to report. I do want to go ahead and get into some of these preset screens that are available to you on StockCharts. And today we're going to take a look at stocks that gap up, and then we will review how you can use the results. I went ahead and saved that screen from Friday. We'll take a look at where some of those names are now. But before I get into that, we are going to take a brief break here, and we will be right back with those preset screens.
The point of On Trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
Welcome back. So we are going to take a look. What I'm going to do right now is go ahead and share with you examples of stocks that have gapped up. And these are earnings related. This is taking us back to last quarter, or actually Q4 earnings, and it's the beginning of this year. This is Xilinx XLNX. And we can see that at the end of January, they did report very strong earnings. The stock gapped up in response. Now, two things you want to pay attention to when you see this gap up is the volume characteristics. Is it on huge volume? That's telling you that analysts want in. And then from there, you're going to want to pay attention to analyst upgrades, because as they dig in, digest this very strong report, you will see estimates continuing to be revised upward. That's going to carry this upward momentum. And we can see that the stock in this particular instance, this gap up, it was able to advance quite significantly. But of course, the sword does slice both ways. This company did come out and report negative earnings for their first quarter, and the stock did, of course, and you can see here, responded quite negatively to that. But today we're going to take a look at gaps up. I'm going to share with you some other recent examples, and this is with an eye toward what you can look for going forward once a stock does gap up. We are in the throes of earnings season. We're seeing a number of these companies, after they report strong results, they are gapping up. Here's a prime example. This is RPM. The company came out with earnings recently. We can see that back here. And the stock, in fact, you can see it had this gap up here. It did fizzle a bit where the stock came in, but notice how the stock has been able to advance subsequent to this gap up in price. So what you want to pay attention to here, two dynamics. Upon that gap up, we can see that your RSI and your MACD are both very positive and in good standing. But oftentimes what will occur is you'll see a bit of a pullback, certainly close to this 10-day simple moving average. We do have another dynamic in play here with this particular stock that you can be on the lookout for, and that is the stock is breaking out of a very long-term base. This is taking us back to the beginning of December. So when we see this pullback, it is in fact taking us back to the top of that prior base. And the stock is, of course, continuing to advance from there. We can also take a look at those volume characteristics that I mentioned to you. This gap up occurred on huge volume. Institutions went in, and as the stock continues to progress, you are continuing to see that increased volume characteristic. Let's take a look at another recent gap up that has occurred. And again, most of these are going to be earnings related. AUDC is audio codes. This is another one, gapped up. Take a look at that huge volume. This is telling you, again, institutions want in, there's more upside ahead. And this is another stock that broke out of this longer term base upon that gap up in earnings. And we can see that the stock is continuing to stair step higher and advance. Again, oftentimes these companies in which is the case here, analysts are revising estimates higher for the remainder of this year as well as next year. And of course, that's going to continue to help propel the stock higher. Another quick name that we can take a look at here is Sherwin-Williams. And this is in the same industry group as RPM. And take a look at this gap up, again, earnings related, huge volume. The stock is continuing to advance higher, and we can see the volume characteristics are continuing to stay in place with this higher volume here. Again, analysts are revising estimates higher for this year. And we can take a look at one other name, and this is a recent advance, of course, last week, Twitter, and then we can see this gap up on earnings. Take a look at this volume. Now, sometimes it can be helpful to go back. Historically, we can see the stock gapped up back here on earnings. But again, that May period, the entire market really fell under distribution. So it's not so easy. But what I would point you toward is prior to getting hit by that May malaise, the stock did in fact continue to find support and trade it higher up beyond that gap up in price. Again, taking a look at that huge volume. So we have a similar characteristic here. Also that phenomenon where the stock is breaking out of this 3-month base in bullish fashion. So now we have a sense, of course, these are all constructive looking charts that have responded positively to these gaps up following earnings. So what I wanted to share with you is the ability for you to run a preset screen on StockCharts.com where you are asking to see all of those stocks that have gapped up. And again, I saved the results from Friday. We'll take a quick peek at them. But just by going into the tools here, we can go ahead and take a look at how you can set up a screen. And for some reason it is escaping me, but it is an ability for you to go ahead in and set up your own customized report so that you can get in front of these stocks. And I'm really, oh, pardon me, it's up here. Sorry about that, guys. Advanced scan workbench is what we want. And so what we can do from here is go down to these predefined scans. Take a look here. And one of these predefined scans is a breakaway gap up or just a gap up. And this is going to be current for today. I'm not sure if it's going to add anything, but we can go ahead and run the screen, see if we get anything. But from here, we're going to take a look at last Friday's so we can see some of these. And in fact, there are a few names today, but they are on the Toronto and London exchanges. So let's go ahead back and take a look at those results from that gap up screen on Friday. And we can take a look at some of these stocks so that they are on your radar. I've shown you some of the characteristics to be on the lookout for, how some of these stocks can, in fact, outperform beyond that gap up. And so this first one here, of course, is Google. This stock gapped up initially 11% on their tremendous earnings. Take a look at that volume. So of course, from here, I mentioned you are going to want to be on the lookout for, is this company, are they revising estimates higher? And oftentimes when you see this tremendous gap up, stocks will mark time before advancing further, because we can see the stock is very advanced above this 10-day simple moving average. And we're not yet out of the woods as far as the stock breaking out to a new high. Let's take a look at some of these others that gapped up on Friday. This is PSO, Pearson, and we can see that the stock did have this tremendous gap up. The stock now is above all of these key simple moving averages. It broke out of this 3-month base. Take a look at the volume. Now it is giving back some of last week's big move, but I will tell you, it is very orderly. It's not giving back a lot. This particular company is not in a dynamic area. It's a book company. This gap up really was only about 6%, but and we can see by these gaps here, it's not a big trader, but certainly something to consider. So let's go ahead and drill down a bit further. Good old Starbucks, huge gap up on earnings. Now today, analysts are actually revising estimates lower. Two different firms came out, but we can see it's barely even responding to that. This stock definitely has a feel that it wants to go higher. We can see that this gap up here, again, I talked earlier about that huge volume, and the fact that this stock, we can go back historically to other periods when it gapped up on earnings and the stock did advance further. Of course, then we got into a difficult period with the broader markets, but you like to see that history where the stock can continue to advance beyond that big gap up. And the stock does, in fact, look poised to trade a bit higher from here. SPSC is another stock. This is a bit of a smaller company. They did another one that gapped up on earnings. This particular stock did break out of a very long base, so that is quite constructive, although overall this stock does appear to be a bit more volatile. It's not going to be as interesting to me as a Starbucks or a Google. And then this is UHS, and this is the stock that I was looking for earlier that reported earnings, because we said that this week Humana and WCG WellCare are reporting. I wanted to point this out as a precedent. Take a look at that big gap up, huge volume. The stock is advancing just a bit further today. It appears poised to potentially trade higher. Again, we had that breakout of that base on that big gap up. So one last one, VGR. This is Vector Group, and we can see that the stock had this big gap up here, and the it's advancing quite a bit further today, up another 8%. This particular gap up was news related. It's not earnings related. Unfortunately, am not aware of the news, but we can see again this huge volume. The stock is continuing to advance as it reverses this downtrend. Certainly extended here. We can see the stock is overbought by this RSI that's up here above that 70 level, so be aware of that. So those are some preset screen gap up, other certainly predefined screens that you can utilize to help get you in front of potential stocks. Now, I don't want to leave this show without reviewing how you can tell when that uptrend is over, when you would be well served to exit your stock. So we're first going to take a look at a prime example. This is Align Technologies, ALGN, and I marked it up just a bit here. But what I did want to point out to you is when a stock begins to potentially reverse this uptrend, the first sign is the stock will break below these simple moving averages. This green line is your 10-day, the blue is the 200-day, and the red is your 50-day simple moving average. So we can see here back at the end of April, we did have this significant break. However, the RSI still stayed above or at this net neutral 50. So you're in good standing. The stock was able to shake off this one-day break and continue to advance. But as we move on, take a look at this break here in the beginning of June. The stock breaks not only that 10-day, it also breaks below this 50-day simple moving average. The RSI now is trending negatively, and your MACD, moving average, convergence, divergence, is also trending negatively. So once we get this break below this 50-day simple moving average in conjunction with the MACD that is now below that 0 and the RSI is below 50, that is your signal. And we can see we did have this rally attempt, but net, this uptrend was reversed. Let's take a look at a couple of other examples so that you can really have a good sense of what to be on the lookout for to know that your stock could very well be headed lower. This is Advanced Auto Parts, AAP. Again, very similar dynamics, because what we can see is the stock is breaking down below this first, the 10-day simple moving average, then the 50-day. So now at that 50-day break below, we can see that your RSI is below that 50 and your MACD is below that net neutral 0. And we can see at the very least the stock is headed for more downtime. Also, the stock really has been in a go nowhere environment for quite some time. You could have easily put your money to work in more vibrant areas. Take a look at another example. This is Box Inc.'s BOX. And of course, in hindsight, it's going to look very, very easy. But again, what I'm pointing out to you are signals that you can really put to work for you, so you'll know that this uptrend is over. And quite simply, we can go back to last year, similar dynamics where we have this break below these simple moving averages. But in this case, it was that 200-day simple moving average break, because if you stay in there beyond a 50-day, which is the red simple moving average, for those of you that are longer term investors, certainly when it breaks that 200, you should be long gone, because we can see a break. That's your blue line. It's quite simply a smoothed out version of the last 200 days of trading price history. The price breaks below that 200, then you're really in trouble. So we can see over here this gap down on earnings. Now, of course, this would have occurred, and if you didn't have a stop loss, you would have been not in good standing. That's why I'm taking you back here, where you can really see the evolution and the continued deterioration of this particular stock. Let's take a look at CGC. This is one of the marijuana stocks, and we can see this particular period here where the stock really came very close, and it did in fact hit a new high in price, looked very, very bullish. A lot of people at this juncture would have thought this would have been an ideal buy candidate following this gap up on earnings. But what I want to point out here again is that slow continued deterioration in the stock as it broke through the 10-day. You're still okay, your RSI. Let's take a look at the MACD down here. It's still up here in positive territory. But again, once it breaks this 50-day simple moving average, followed by a break below that 200-day, this really is your sign. We can see back here, historically, the stock was able to break that 50-day find support. So this is where history, you want to look at a stock's history. You would have stayed with it following this break. But again, once it breaks that 200-day, then you are well advised to exit the stock. We have time for one last example. This is Children's Place. And yet again, back here, this of course is with the broader markets, but it is still worth noting, once the stock breaks these key simple moving averages on volume and your RSI and MACD breakdown, you are well advised to exit. I'm going to leave it at that. Again, email me with your questions. I will get to them next week. For those of you trading, happy trading.